Good morning, good afternoon, and good evening. My name is Phil Fletcher. I'm a member of the Georgetown Board of Regents. I'm going to be acting as moderator on this panel on careers in banking and finance. I spent my own career as a lawyer at a Wall Street law firm ranging from Hong Kong to New York to London. So I've had a chance to watch the evolution of this industry, but we've drawn a panel, a terrific panel today, drawn from our Board of Regents, which really demonstrate just how embedded and successful Hoyas have been in the finance industry. The first member of the panel is Maria Hackley, who has spent her career at Citibank, where she's the co-head of the Industrials Group. She's a leader in women's retention at Citi, and perhaps most importantly, she is the captain of the Georgetown recruiting team at Citibank. We have Elizabeth McCall, who has spent her career in a wide-ranging number of places. She started off at Goldman Sachs, time as the superintendent of banking in New York, running the New York banking industry, effectively regulating it. And she's now with the European Central Bank, where they regulate the top 114 banks across Europe. We have Paul Horvath, who has also spent his career in a number of places. He's worked at the Federal Reserve Bank. He has been in credit derivatives at JP Morgan and Merrill Lynch. In both places, he headed the group, and he's now the CEO of Orchard Capital. Paul was obviously not a very good student at Georgetown because he had to go to Harvard for an MBA for remedial education, but we don't hold that against him. The purpose of our panel today is really to introduce you to careers in banking and help the group form a view as to whether finance is a career you want to pursue, whether it remains an exciting career, and how to pursue a job in it. But before we get into the details of it, perhaps each of you could tell us a little bit about how you developed your careers in finance. Could we start with Maria?
Sure, thank you, Philip. I was in the business school, finance major, and I joined Citi, a number of the big, banks, and did come to on-campus recruiting. And my family is Cuban, so I speak Spanish. And I decided to join the Latin American banking division at Citi, and I've been there for over 35 years. But it was really through, leveraging the career office and really identifying which of the firms that were coming to campus that helped shape me, in addition to my interest in finance and economics.
Elizabeth?
Hi, everybody. It's a pleasure to be with you all today. I started out my career at Goldman Sachs. Right after college, I studied economics and political science in college, and at 22 became an analyst, and then an associate, and then a vice president at Goldman in investment banking. And I have a little mantra, which is, when people ask me about their careers and how they manage it and how do they get certain places, my own little philosophy is head down and hand up. Do good work, but always raise your hand for opportunities. And that got me into public service for some years, where I was superintendent of banks in New York. And don't ask me, why I quit a high-paying job and left a great career at Goldman to go into public service, but I was talked into it, and it was the most amazing thing I could have done because I saw the entire landscape. I then went into consulting, and I founded the New York office of Promontory, where we helped financial services institutions. I became CEO of our European operations, founded those operations, and really spent a lot of time on that. And just a year ago, I was asked to join the board of the European Central Bank. So I've had a very international career.
Oh, great. And Paul?
Hi, Philip, and thank you for being so bold as to moderate this and try to lead this motley crew. My career path is somewhat similar to Elizabeth's, in that I started at the Federal Reserve, and that defined my career. It wasn't an obvious choice. In fact, I graduated from the college in 1989, And that was right in the middle of RJR Nabisco and LBOs and all these really fancy high-paying jobs from Drexel, Burnham Lambert, and those other places were coming to campus. And I got my fair share of offers, again, going through the campus recruiting. But my dad thought that I should get some advice. So he set up an informational interview with the president of Morgan Stanley at the time. And I laid out all my options. And he said, you absolutely should go to the Federal Reserve. And I said, but Drexel Burnham Lambert is paying 4 times as much and I can be rich. At least that's what I thought. It was a lot more than the beer money that I was sort of making at the time. He said, you know, go into the non-obvious thing. Georgetown students are there to solve problems. Go to the Fed, learn how it works, and you won't regret it. And I said, well, why should I do that? He said, well, that's how I started, and I'm not doing too badly. He was president of Morgan Stanley. So it did define my career. After the Federal Reserve, I was very junior at the time, but I was assisting on economists who were seizing and working out banks, restructuring banks during and after the savings and loan crisis. I then went to Wall Street, where I advised banks on how to keep from being seized by the Federal Reserve. After business school, I went to Europe, and at JP Morgan and Merrill Lynch, we really developed the credit derivatives market by and large to help banks shore up their capital position so that they could not be seized by the Federal Reserve and the predecessor to the ECB, where Elizabeth works. And in 07, 08, seeing the banking crisis coming, I decided to take that into the private sector and created a company, Orchard Global Asset Management. And what we do is we work with the top people like Elizabeth. We work with the top 30 banks and their 14 regulators and make sure that they don't get seized and have enough capital to comply with all the rules. So that one decision that I made, my goodness, 30 years ago has defined my career.
Well, the three of you have demonstrated there are a lot of different ways to pursue a career in finance. For the audience, we're just going to go through some questions and get some discussion going among the panelists. But I want to encourage you that to pose questions through the Q&A function, and we'll keep track of that. We will leave plenty of time for your questions to be responded to. So please do raise them. We'd like this to be as responsive to whatever your interests are. But what Paul has introduced us to is the idea that the finance industry has changed a lot over the years. There's been financial crisis, changes in regulation, changes in approaches, changes in structure. And I wonder, Elizabeth, if you could walk us through your observations on the kind of changes that have been taking place perhaps more recently in the finance industry, and what the implications are for people starting off their careers.
Thank you, Philip. And it's a really good question. You know, and maybe I just start with the idea that I have, which is this is a particularly exciting moment to even be thinking about entering the world of finance. So I would, at the outset, be extremely encouraging of those that are thinking about careers. And I would also be very encouraging of folks that are looking at careers in finance to think very broadly. We are at a moment of incredible disruption in the financial services industry. And if COVID and pandemic has taught us anything, it's that there's such opportunity to do many basic economic things quite differently on a large scale basis than we've done before. So, you know, that you have the traditional players, which are extremely active and all offer incredible careers: private equity, hedge funds, investment banking, commercial banking. And all of those are going through very exciting changes to their business models. So that even inside those institutions, which are the more traditional finance players, the opportunities are extremely broad. The second observation I have is about the disruption. There are so many intermediaries between the consumer, the institutions, and the marketplace that you can engage with. There is technology companies that are entering directly the banking business via mainly the payments processes. You know, Facebook, Venmo, Venmo, PayPal, Google, all of these things are going to be players in some way, shape, or form, and so are the large players. I'm also often asked about, whether you have to be a technologist in today's world to even be thinking about finance. And like Maria, I ran recruiting for analysts and associates at Goldman. I did an enormous amount of recruiting over a number of years at Promontory, and Georgetown was very much our go-to place. Why? It's because the Georgetown student is very broad, has a deep, excellent grounding in education in how to think, and also understands how to do analytics. And, having finance background, having technology background, but having a broad background also are really desirable components of a candidate for finance today.
I guess I would also add that, at Citi as an example, we are going through a material transformation. We have a very big consumer bank, and we have a very big institutional bank covering large multinational clients. And certainly there is massive investments by all the big money centers and investment banks in terms of the disruption that Elizabeth just reviewed, and really partnering up not only with fintech companies, but also how we think about our target market. So if you think about in industrials, it's 8 sectors. One of them is the auto sector, which we've just renamed mobility. So when you think about, what's happening to the auto sector with, electric cars and driverless cars and the Ubers and Lyfts that are also disrupting the purchase of cars, we are expanding the market and clients that we cover to tech companies, right? So like GM acquired Cruise. That's just an example of where you're purchasing the brains of all these electric and driverless cars. So what's neat is that these traditional companies, in order not to get disintermediated, are really aligning themselves with fintech. So for all of you, it's an exciting time not only to get the appropriate analytical training background, whether it's in finance or on the investing side, but importantly to aligning yourself with what you're reading about every day with all these technology companies and how they're embedding themselves with big banks to be able to service individual and corporate clients.
Paul? Anything to add to that? You're on mute, Paul.
Sorry, I've been.
That's why we had to send you to remedial education, Paul, to Harvard.
It's a good thing that I'm not running a tech company. Yeah, look, I'd like to echo what Maria and Elizabeth are saying. There's a general point, and I think then there's a Georgetown point. And I'd like to just touch on both. As actually both Elizabeth and Maria have said, everything's changing, and it has been changing in finance, and everything's changing very quickly in the world. And so what I would caution, whether you're coming from the business school and you probably understand finance and accounting better than, say, an international relations or econ graduate, or you're coming from the Foreign Service or the college, I would say that right after, especially for undergrads, right after you graduate, that first job, you don't necessarily need yet to get that perfectly defined expertise in mortgage-backed securities or M&A. I would offer some advice that try to go into that job that gives you the broadest and most applicable to all markets skills possible, rather than specializing too early, because whatever is hot now, by definition, is not going to be hot soon thereafter. Better you think analytically, know how to express yourself, know how to think, know how to solve problems, than be the fastest multiplier of mortgage-backed securities, for example. So that's, I think, broad advice that I would share with all of you. But then I'd like to speak about Georgetown specifically. And Elizabeth said that Georgetown was one of their go-to places. Well, for sure, when I was at JP Morgan and Merrill Lynch, it was as well. And it's important to know the reason why. You know, my career in derivatives, and certainly our hedge fund, is one of the most quantitative parts of finance. So I do not want to downplay financial expertise and quantitative execution and analytics. However, if I really want the most quantitatively strong candidate, there are schools in France and in India that, or indeed in the US at MIT and Caltech that we can go to. The reason why we always like to hire Georgetown people is because Georgetown knows how to get things done. Georgetown students know how to think, how to lead, how to organize. Maybe it's the Jesuit and Catholic tradition. Maybe it's we're not taking ourselves too seriously. We're just here to get things done. But you know, we would go for technical expertise, super technical expertise. We may go to the technical schools, but at Georgetown, we would go for our future leaders to organize, lead, and set the strategy for the organization, and really communicate that in a way that other people can follow.
Maria or Elizabeth, the question Paul's really addressing here is, what advice do we have for both undergrads and we've got quite a few grad students on the line who are posing questions as well. And I wonder if you could share your broadest advice, and then maybe we could turn to the more specific question of how do you get your first job? Maria, you want to try that?
Yeah, I mean, look, I can start. I mean, I certainly, you know, would encourage you, you know, as early as possible, your tenure at Georgetown, to get engaged with the Crawley Center. You know, there's a lot of resources at the Crawley Center, and they also have Hoya Gateway, which is a electronic connector to alumni who volunteer to coach and to mentor and to provide information about certain careers. And there's a lot, the breadth of careers in business and in the public sector world is extensive. And the wonderful thing about Georgetown is, given the global nature of its student body and its strategic focus as a school, that you're able to get exposure and learn. And I would say, I always give the analogy, investing in your career, or it's the same when the people invest to go to the gym, I think is really critical, because the more that you learn, the more that will help you better focus. And I think, as you know, as Paul said at the beginning, you know, of your career, you may not, you know, try to go broad, but you may not necessarily find that. And what it will help you do is, as you get into these jobs, what you like and what you don't like. Even though, like, I started in finance 35 years ago and I liked it enough and I stayed in it. But I would say be strategic in terms of investing the time. Also, the university puts and provides a lot of firms that used to go in person to the Levy Center. Now I'm sure mostly everything obviously is virtual, but show up, engage, learn, because you have to really invest, because it is very competitive. And really also leverage the network that you may have, you know, through friends and family, to really refine, and also your teachers. You know, I think your teachers, what increasingly Georgetown wants to do is have greater alignment with the Crawley Center, with all the schools within Georgetown, to make sure that we're connected and providing, you know, advice around careers. So, you know, just be very thoughtful about that, be early, and utilize a lot of the tools that the university has.
I couldn't agree more with Maria's advice, and I'm going to use that if you don't mind. It's like investing in going to the gym. And the way that I always put it is, it's a job to get a job. And you really have to treat it that way. And there's a few things that I would say. If you're interested in working in the world of finance, there is a plethora of opportunities that are there. Having said that, let's say that you're a poli-sci major. I would give everyone on this video the same advice I would give my kids. Take a finance class, take 2, and take accounting. Because if you want to be credible in the interviews about approaching a career in finance, you got to have a little bit of background in that. And there's so many opportunities to do that in your Georgetown life, outside of your Georgetown life, with all of the availabilities. It's something that you can easily get under your belt. The second thing Maria said is completely correct. Engage with the resources that are available to you. Georgetown has an unbelievable network. And maybe what I would add to her good advice about the Career Center is the network. And Georgetown family wants to help Georgetown family. And so figuring out who's working where and how you can get in front of those folks is a really useful thing to do. It's part of the job of getting a job. The third thing is do your homework. If you're going to show up at an interview in a particular part of the business, make sure you've read the recent news that's available. Make sure you've completely researched the people that you know that you will be in front of and what their interests are. And then last, I want to say, don't limit yourself. I find so many young people say, oh, I'm never going to be able to get a job in that because I'm not X or Y or Z. What employers are looking to hire is they're looking to hire for potential, not for perfection that's already existent in the person. They are looking at you with where can they go with you. If they wanted to hire, Paul said this, if they wanted to hire the top quant expert, they're going to do that. And if you're the quant expert, that's terrific. But if you are looking for something else and you're involved in a certain thing, don't limit yourself and say, I can't do that because I don't have all of that background. And be creative is my very last point. And I share just a story, and it's a personal one. But how did I get my job at Goldman Sachs? Well, I got creative. I wanted to go into public finance. I wanted to marry the public sector and the private sector. I was really interested in investment banking. And I researched what that industry was about. I understood how we financed infrastructure, airports, hospitals, power plants, and all of that. And then I didn't really have a network. I come from a poor family. I didn't know anybody to introduce me to anyone that was working there. But so I went to the library. Back then we did that. And I got the book with who worked at the various firms in public finance. And I started sending my resume and my letter to those people. And I started sending it to the top name on every list, the top person at Drexel, the top person at Morgan Stanley, the top person at the various places. And I got a little bit bored and I got creative. My last name is McCall. I started picking Irish names. Silly thing, but I ended up sending my resume to a guy named Mike Tierney at Goldman Sachs, who had never in his life received an outreach from someone. So he called me immediately and had me come in for an interview. And they made a second job for a second analyst for me after that. But so, you never know what's going to work from the networking point of view. Try everything.
One of the changes that's been taking place in this industry has been, I call it the disintermediation of banks, but it's the plethora of other financial institutions that have opened up. So banks are still obviously the key to finance. It's probably the major source of hiring for Georgetown alumni. The three of you have all spent your time as analysts or whatever jobs at banks, but with this wide range of other financing institutions, some like what Paul's working at and others, what are they all about? And how does one think about them and careers in them? And I throw that open, perhaps, Elizabeth, why don't you think about that for a bit for us?
Yeah, the plethora of opportunity, it can lead you in so many different directions. And it doesn't necessarily need to lead you to having a finance background, for example. You can really, things are different. Maria is such a wonderful example of someone who spent 35 years at Citi, and that's who I thought I would be. But today, what I see is people are trying different things at the beginning of their career, bearing down on learning a skill, learning an activity, and then moving to the next thing and something else. And I think that's quite an exciting way of approaching things. And some folks might have a very clear idea of where they want to land. They want to be in private equity, let's say, down the road. Well, learning some skills, becoming expert in an industry, really becoming a credit expert, for example, or something like that. You can do that in a wide variety of ways. And, this plethora it's not just about technology companies, that type of disintermediation. There's also market intermediaries that have really opened up the trading platforms and are replacing some of the older brokerages. And these kinds of companies are looking for developing young people into being business requirements experts about what the clients need in order to be able to do trading platform activities, for example. So many ways that you can get involved, and I really encourage being very broad in the search.
Yeah, Philip, I could build on what Elizabeth is saying. I think it probably was true in the 80s when we were all applying, that if you wanted to be somebody in finance, you had to get into an analyst program at one of the big banks. And then ultimately, I think that grew onto consultants as well. That may or may not have been true then, I think it was, but it's definitely not the case now. Obviously, we know that in addition to that, there's the private equity firms and there's the VCs and there's even fintech. But going back to a theme, well, really that both Elizabeth and Maria had focused on, which is this concept of, we're almost saying two things at the same time. Be broad, use your Georgetown liberal arts education to learn the things of the Renaissance, how to speak, how to lead, how to be analytical. So that's important, build those skills. But it's a bit like getting into college. This concept, every college counselor talks about demonstrated interest. So you can be that, as Elizabeth said, that poli-sci major, or indeed, I actually studied art history, among other things, but in your education. But either do what Elizabeth is saying, is take an accounting class or a finance class, if for no other reason to have something to talk about, but it's also demonstrated interest. The other thing you can do, for those of you who aren't seniors on this panel, is, well, you can have a rich liberal arts problem-solving education or international relations education. Demonstrate an interest, go and get an internship. Sure, if you can get an internship at Goldman Sachs, like Elizabeth did, well, that's fantastic. But go to the Orchard Capitals of the world, or a fintech startup, or anything that demonstrates an interest. Yes, I have this broad background and that's going to help you, but actually, I also have an interest in finance. That's why I've spent 2 or 3 summers doing X, Y, or Z. For those of you who are seniors or even graduate students, it's kind of the same advice. But most of the people that I know who end up being, not all, leaders of these big banks and private equity companies, and indeed many hedge funds, some went through the analyst program. Most of them built skills, built definable skills. Maybe it's in public finance, like Elizabeth was saying, or maybe it's even a legal skill, or maybe it's a technology skill. I think that all of us, certainly I did, we focused too much on how do I get into the highest paying, coolest, hottest job right now before my 22nd birthday. And the advice I was given, actually, I worked at Merrill Lynch, and at the time, Merrill Lynch owned 40% of Bloomberg. And because we owned 40% of him, against his will, he was forced to actually lead off there was 400 of us in the associate training program. He would give the kickoff, and he said, by the way, if any of you want career advice, come see me. Well, I took him literally, and I went to Bloomberg's headquarters, and I came see him. And because we owned him, he had to see me. And what he said was, and it's really what Elizabeth and Maria, and I hope myself, are saying, he gave me a very specific piece of advice that I think was very useful. He said, don't go into whatever is hot right now. And I don't know if that's SPACs or tech or whatever is hot right now. You're early in your career, don't go into that. Because by the time you get relevant in that, the point where you can lead and make a lot of money in that, that technology will be obsolete. Try to identify things that are or could be emerging that are maybe less popular. Try to find problems in the world or in finance that need solutions. Go into that now. And as you grow in your career, that area, if you've chosen well, will become more important. And then you can be the young leader of this new innovation in finance rather than being the more commodity-like follower. And it really comes back to what Elizabeth is saying. Spend your 20s building skills so that you can harvest those skills, be differentiated in your 30s and 40s and beyond.
One of the other career paths we think about, what the alternatives are to getting on the Hoya train up to New York. Corporates have all got finance wings to them. Private equity sponsors have finance wings to it. Maria, you deal with the industrials. You're probably dealing with the in-house finance function in a lot of areas. Is that a fruitful area for people to think about? Can they get jobs straight out of college or grad school in that field, or does one go through banking to pursue that sort of career? And what does it look like?
Yes, I mean, you can certainly, diligence career opportunities at all the big multinational corporations. So as an example, I actively cover General Electric, GE, and they've always had a very, elitist, difficult to get into, but very rigorous, financial management and training analysis, where, I'm planning course, which was always deemed sort of a gold standard. And similarly, all of the very big multinationals have that. And that could just be a preference to work at a particular company because you may have an affiliation to it, because you maybe you worked on a case study that it appealed to you. It could be geographically that you don't necessarily want to be working in New York, which is not necessarily a bad thing either. I'm not from New York. And people have really productive, successful careers in many cities around the United States and around the world. And what they look like, they're all going to be different depending upon the company, but they certainly will give you a rotational experience within different business units. Some of them obviously you'll work in the financial part, some of it maybe in the manufacturing component of it. Depending upon the company, but certainly leverage that and think about, this is where, as Elizabeth said, investing in your network. If you have one or something that's piqued your interest, for example, you could have a relative that's in the health, it could be a nurse or a doctor, and healthcare may appeal to you for a variety of reasons, which is actually, it's a very hot sector right now. Find out more about that. And again, the investment that you make in diligencing firms and talking to people will also give you a sense of the work, but also of the culture of the company. And no matter whether it's a bank or whatever it is, a public service company or the Federal Reserve Bank, when you're speaking, treat every conversation informational as an interview. Also, use it as an opportunity to really diligence, what are the people like? They're part of they will be your work family. And does that appeal to you because you spend a lot of hours at all these firms? And the culture is really critical to me as much as is the work and the skills that you're learning. So, just be sort of deliberate about that. But getting back to, corporate, there's obviously a plethora of corporate companies as well that are very global in nature, many of them. So think about if that appeals to you. When I came to Citi, we're in over 100 countries. That mattered to me. That's why I also went to Georgetown. That's why we have 200 Hoyas in our headquartered building. But just think about, nowadays, the mission of the company matters. Are they environmental? Are they, when you think about ESG and sustainable and their governance, ESG is a big focus. I know that investors and stakeholders are very focused around that. So think about components of companies and where they are in that continuum of criteria that matter to you to be focused on what companies you're going to consider.
Philip, just one thing that I might throw in, maybe building on Maria's speaking Spanish and working. One thing that I found, we found it for sure at JP Morgan and Merrill Lynch, and we continue, is for those international students, we found it's harder. There's plenty of well-trained Americans going to American universities who want to get into finance in America. I can't speak for Latin America, but in Europe, for whatever reason, we were dying for US educated, be it at the business school or in any of the schools, US educated, Georgetown and a handful of other schools who were willing to go into finance, back in their home country in Europe. For whatever reason, culturally, in Germany, for example, all of the coolest jobs were at Daimler-Benz or at Siemens. So we really struggled to get, and I know Goldman did and Citi did, we struggled to get US trained candidates. So if you happen to be, have a specialization in a language or a region, then you, these employers, they were then and we are now, we're looking for you. It's all about supply and demand. And if you can supply something that the market is demanding and there is limited supply, you're going to do very well. So for the international students, don't hesitate to reach out. Now, the organization sometimes can't be as good. So if you're German, for sure, reach out to whatever, JP Morgan, Citibank, Goldman Sachs, Germany, but also make sure that you're letting the people in London and in New York know that you really want to, you're German, you want to get a job in Germany, or you're French and you want to get a job in France, because I would say that falls between the crack. It's frustration among recruiters and it's a real opportunity. And if anything else, Georgetown's recognition, amongst employers as an American organization that does have real international relevancy is something that's very much part of the brand and can really help those international students working together.
I want to also add to just leverage also the Georgetown networks if you live abroad, and there's very significant regional Georgetown local chapters, and tap into them as well for networking and guidance.
I'd have to add on that I was the chair of the London City Alliance in the UK, where we have almost 1,000 members who are all ranging from junior to very senior positions in the UK, and not enough people are sharp enough to reach out to the alumni networks who are overseas to touch base on them. But we've touched on the geographic diversity that's available in the finance industry. It's obviously an industry that's everywhere, with both activity in the major finance centers, but all over the world. I think we've touched on that. What about careers in the public sector? Elizabeth, you're obviously in the public sector now as a regulator, but what about careers with regulators or multilaterals or national development banks?
I can speak a lot about the advantages of taking a career in the public sector, even as a person coming straight out of a graduate program or out of undergraduate. The perspective that you're able to gain in one of these institutions, and the one that I am with now is the ECB. I'm on the supervisory board there. It's an executive board role, so I'm extremely involved in the oversight of globally active financial services institutions and of course the whole European regulatory framework in the Euro area. What a career it is, what a career step it is to get that viewpoint even early in your career, and how valuable it is on your resume. Because and let me say this particular moment just to link it up to the disruption that's taking place. We're going through this period where we're asking big questions as a society about the role of fintech, the activities of financial services companies, and how consumers are protected, and how we eliminate drug trafficking, human trafficking, anti-money laundering, and things like this. if you have a chance to work at the Fed, at the ECB, at a supervisory role, a financial services role in the public sector in the beginning of your career at the ECB, we're hiring. You can apply for a traineeship. You need to be a European national, and you could be a graduate student coming in for what's called a graduate program. The traineeship is amazing. You can come for 12 months and work for the ECB for 12 months and then move on to another role. And it's a super valuable credential because understanding how this regulation is important and changing and will be applied in lots of ways to lots of new activities. I'm even thinking of, even the content-based questions that we are facing now with AI and responsible use of AI and all of those things. I mean, the public sector can provide a great background in those kinds of things, and also climate change. Absolutely.
Philip, I think it's an excellent question you're asking, and it's embedded in that question is a really good piece of career advice. I mean, I think Elizabeth and I are living examples of that, but maybe to give a little context, I think that probably before 2007, having worked in finance for 20 years before that, I don't think that the perception anyways was that Washington or Brussels or Basel or Berlin mattered that much. There were places you had to sort of avoid or acknowledge, maybe come to Washington every year for an IMF meeting or every other year. Well, the global financial crisis changed that. And I think it changed it forever. And just in case that wasn't enough, obviously what's happened with the pandemic is a 10 years, 11 years later reminder of how important. It turns out that now and for the foreseeable future, governments, regulators matter, and they matter in a very meaningful way. They're not just regulating and making the rules. They are writing the biggest checks in the world, literally. So number one. Number two, it gets back to the supply and demand concept, but applied in a different way. People are afraid of regulators. People think that you want to, as I said, stay away from them. But if you work for a regulator, as Elizabeth does, or worked for a regulator, you realize that regulators aren't evil people. They're not anti-business. They're not trying to stop you from doing your job. They just sort of pray to a different religion. It's not about profit maximization. It's about how do we keep the banking system stable, and how do we make sure that we're solving the biggest problems, that keeping banks so they can lend and create jobs. And if you have that differentiated perspective, well, you could have a career, starting as a regulator and ending as a regulator. But again, some of my early experience, I was talking earlier, once you have that perspective and you realize how regulators think differently and can work with the private sector, you have one of those sort of sellable skills that other people don't have. So the public sector can be very interesting, but it also can be a springboard. I got better jobs than I should have because I had worked at the Fed. And yes, it doesn't pay as well, but I would argue I got paid in opportunities much more than the difference between my $17,000 a year Fed job and what would have been a $100,000 a year Drexel Burnham Lambert job. So I think it's especially now can be a very interesting and fruitful, rewarding stop to go on pursuing your career goals.
And just an observation, which is, in addition to regulators, there are a lot of public sector finance jobs in Washington, for example, what used to be OPIC or the US Exim Bank, and those are replicated really across the world in many capitals with export finance or development finance. And then there are the multilaterals, which are especially attractive for non-US citizens who have perhaps an easier time getting a job with the World Bank Group, for example. Those are terrific careers. But I'm looking at the range of questions we're getting from the audience, and a number of them focus on the question of lateraling into finance, not focusing on the undergrad who's been taking accounting courses, but people who've got background in, for example, real estate, cybersecurity, law, and are either doing graduate degrees or are now mid-career and are looking at finance as a possible route for alternate employment. What do you think about entry points lateraling in with other experience and other backgrounds into the finance industry? Is that plausible? Are there points of entry? Or do some of the lessons that you've been describing about networking and otherwise apply in that context as well?
I could jump in on that if that's okay. I'd be encouraging of it. And I don't for a minute not understand that it's difficult to move into a different career, especially mid-career or something like that. But let me say why I'd be encouraging of it, and probably in a couple of particular areas. You know, something I learned at Goldman was that we had a practice of keeping the partner in the corner office who had just retired. And we kept that person in the corner office because of wisdom. And that wisdom was then made available to the rest of the people on the floor. You know, the folks that had been through credit crisis, liquidity crisis, bankruptcies, reputational issues. The experience can't be replaced. And at this moment, you know, in the pandemic moment, I see a real need and you know, we don't have enough expertise out there in the industry on the credit side to really understand what's happening as a result of the pandemic. You know, there've been all these wonderful fiscal supports and moratoria that have been put in place for really good reasons to cushion everyone while we're in these lockdowns. But when we get to the other side and we reopen, what does it look like? Do we have, you know, have we had a good line of sight into those things, and how are we going to restructure and how are we going to make the recovery really positive? And I'm speaking globally when I make those comments. The second point that I would make for mid-career people is, again, it's the wisdom point, and it's life experience, and it's things that you've done. It's not enough just to have the young graduates, you know, doing all of the work on the new fintechs and things of that nature. And I can speak here as a regulator, having the wisdom to understand what some of the pitfalls are, what the reputational issues are, what some of the business model sustainability issues might be. That comes with some experience. And so I'd be very encouraging of folks looking to make some changes.
And I would add as well, and look, that's why your network is so important. But, you know, Philip mentioned, you know, cybersecurity. I mean, that's front and center, you know, for all financial firms, big and small. And, you know, there are, you know, I think depending upon your field in, you know, there's a lot of relevance and need. Compliance is another one that is huge in the financial services sector, and remediation. So, you know, I think part of it is if you're at a stage in your career, even at mid-level, where you're not being challenged and you've always been interested in a particular area, I think you pursue that. You know, if you're struggling, as I always say, you know, to you know, nieces and nephews of mine, you know, and a lot of alum, you know, if you struggle to, sorry about that, hold on.
You're on mute.
Sorry. Okay. Sorry about that. That was my daughter calling, who's a Hoya as well, who's a business school right now. Probably calling about career advice as well. But what I would just say is, you know, you have to drive your career and really leverage your interest and continue to pursue so that you're engaged and you have passion in what you're doing. And there could be, you know, I happen to have been in finance, but I've pivoted into first financial institutions for the first 20 years. And then I pivoted to industrials for a variety of reasons. And I would just say that you need to be thoughtful, but really, you know, continue your journey of being engaged and having interest in your career, because it's usually a long one. And it is so critical also to pivot as the economy and the world pivots. And I think, with disintermediation, technology and this, what we're seeing, the acceleration of what's occurring, this is a time where we all working in our selected firms are also pivoting, and we're getting out of our comfort zone. And, leaders have to be comfortable being uncomfortable. So just remember always to want to learn and find the right career choices that will continue to engage you.
When I look at the questions that have come in from people with really terrific experience in different fields, I cited real estate, cybersecurity, law, sales, other things. It strikes me that, as you talk about pivoting, Maria, and Elizabeth, as you talked about different changes, the pandemic coming on, whatever experience one might have may overlap with areas in finance. If one is an expert in cybersecurity, there are institutions that are lending or involved in finance with cybersecurity industry. And I would bet most of those finance people don't know much about cybersecurity. So if they can recruit somebody who knows something about that industry, or real estate with all the changes going on there, there are opportunities to overlap your experience with the finance industry and try and use the network to apply it. I think those are some of the lessons. Now, one question that did pop up, one Hoya who's taking advantage of her network here, being my GSP mentee, who I'm proud to say has gotten a job at a terrific finance institution, wants to know what it's like to be able to move from one great bank to another great bank. Is there much lateral movement in the industry? Having gotten a job at an institution that looks a little bit like Citi, could one move to a Citi or a Goldman or whatever, or does one really pursue one's career in one bank for life?
Well, having done one or two of those moves, Philip, I can speak to that. And I think the answer is yes, and it does happen. I think it probably happens more in Europe and Asia than it does in the US, but that's a bit of a generalization. However, I would say one or two things to think about. Number one, have a very good reason to do so. It can't just be, I didn't like my bonus that year, so I'm gonna take my ball and go home. Be very thoughtful about what does the new institution have that values more what skills I have than my current institution. So yes, do it, but try not to do it too early. Try to do it for the right reasons, and try not to do it too frequently. Now, having given that caution, it can be a way to change your career. So my particular story was interesting. I did 5 years at Merrill Lynch, and myself and another person went to JP Morgan. But there was a reason why. Merrill Lynch was a sales-driven organization, and we had a capability at taking complex. Merrill Lynch was probably one of the best selling organizations. JP Morgan was very good technology. I would say better technology, certainly in derivatives, than Merrill Lynch had. But they really needed a sales skill. So me and that individual went over and helped JP Morgan sell all the wonderful things that they had created, but they weren't selling as well. And in so doing, we leapfrogged our careers, and literally the job that we took was not 10% more than we were doing, it was 100 or 200% more. 5 years later, having amassed those skills, he and I returned, as it happened with 80 people. Merrill Lynch was good at sales, but they really needed the JP Morgan technology. So we took the technology that JP Morgan had, brought 80 people back to Merrill Lynch to join the technology of JP Morgan with the sales skill of Merrill Lynch. The reason I got into that detail, that story, is don't just do it because you had a bad conversation with your boss, you didn't like your bonus. It can be a way to really leapfrog your career, but do it not too often, have a very good reason, be very thoughtful and very, very strategic about how you do it. But the warning I would say is it can be very helpful to your career, and it was, but it's not easy. If you've been trained the Goldman way or the Morgan way or the Merrill way, it becomes almost like a religion. And if you're any good and you excel, you believe in that religion. And to go from one religion to another and detrain yourself of some of the culture of one and learn the other, there's reasons to do it. I've given one, but the switching cost, at least emotionally, cannot be underestimated. You know, as one of the other panelists said, leaders have to be comfortable being not comfortable. Well, I agree with that, and that can be a good thing, but it will be, you need more than that guaranteed bonus to get you through. You need quite a lot of grit, because it's a very big deal when you do it. It can be a good thing, but it's not to be done without a lot of thought and reflection.
So do it, but be careful.
Exactly.
Now, we've got in the 3 minutes left to us, very quick, and keep answers as short as you can, but the future. We've talked about how we all got here, what the world is beginning to look like. Where is this industry going? Where are the jobs going to be in the future? Where should the next generation of Hoyas be looking to go?
I can start quickly. 2 points. First one is, if there's anything that we've learned in this pandemic, you don't have to come to New York or London to do finance. It's pretty clear that employers have adjusted. I mentor a lot of young people, and they are living and working all over the US and the world, with their headquarters being in New York or London or somewhere else. So location is not a restriction, would be the first point. And then second, and maybe it's really reiteration of the point I made before, the world is changing so much. There's so much opportunity. Be very creative about where you're applying, and be very broad in your search, because there's plenty out there to do.
Maria?
I would say, you know, there is a disintermediation going on in the banking world, but that doesn't mean, or the finance world, that is occurring. And what I would say is that you are going to be, you know, advising clients in a different manner, and particularly in subsectors that will be very disintermediated. I would also say that, you know, there's a lot of emerging growth opportunities outside of the United States. And if you have an interest, like I studied abroad, you know, and one of my biggest regrets is that I never formally took an overseas assignment at Citi in all these years. And I would say, you know, look at and think about interesting areas that you geographically like, or languages that you have. And early in your career, go to those areas and see what are the emerging companies that matter. And now with, you know, supply chain disruption and a lot of multinationals as examples who don't want to be beholden to a certain geographic area, you know, think about the industry and sector that you're interested in, and where they may have important geographic regions and buying centers that may appeal to you. And it doesn't necessarily all have to be in the US with the classic, you know, sort of blue chip companies. I think there is so much emerging with, you know, the fintechs, private equity, you know, wealth management, you know, let alone, you know, the traditional banks, that, you know, you just need to, I think, diligence it more, because there's a lot more optionality today and alternatives than when I went to school in the 80s.
Now, with apologies to Paul, and being respectful of the time of our panelists and our audience, I'm going to bring the presentation to close. And thank you very much to the panelists. Thank you very much for everyone who participated. I hope we provided some background to the finance industry and inspired some to pursue a career in it. For those of you who may have not found inspiration in this career path, there's another opportunity to engage with the Regents on March 3rd, where there'll be a presentation on the film industry, which is something quite different, but equally exciting and interesting and transformative as well. So careers in the film industry on March 3rd, and we hope you'll follow up on that. And thank you very much for everyone for participating.